You don't hold it, you don't own it, and it is easy to be transferred away from you. That's why physical gold and silver outside of the system, held by you, you hold it, you own it, it runs no counterparty risk, and it is virtually invisible to the powers that be. That's why if you look at the chart on spot gold, what do you have? You have a triple top. That means it goes up to a price and then cuts back, up and down, up and down. But that's because a rising gold price is an indication of a failing currency. And once you actually get that this currency is failing, you make different choices. And this is a global issue. When you make your deposit in your 401k and you're giving it to institutional investors that invest your money, this is the final piece. And I can't sit here today and tell you, Chris, that you can't wake up tomorrow morning and have the whole system collapse. Because what's happening is that the financial system is built on a fault line, on an earthquake fault line, and the earthquake has begun. I honestly can see a revolution that has already begun. Once we transitioned into a debt-based system after 1971, they began the financialization of the markets. They concluded turning everything into a financial product. So including real estate, including, obviously oil, water, everything, not just gold and silver, but everything has become a financial product. And it should have been made crystal clear in 2008 that the entities that were deemed too big to fail were the banks and the bank profit. And if you look, the Office of the Comptroller of the Currency, the OCC, does a quarterly report on derivatives in FDIC insured banks. And you can actually see, if you go through that report, you can actually see how the trading profits became, especially once they pushed interest rates down to zero. Well, the traditional way that banks made money was essentially gone once they pushed those interest rates all the way down. So the banks had to make money, and most of their profits come from their trading operation. So Why did they give it to traders? So that banks could keep making money. That's my opinion. I can't exactly prove that. And in 2015, you remember the flash crash in treasuries, where the liquidity in the market, boom, evaporated just that fast. And since 2015, we've had a number of crashes and lack of liquidity in the Treasury markets, in the foundation of the system. And now we're at the point where those that were providing that stability are saying, bye-bye, good luck, we're out. The 10-year Treasury note is the foundation of the global financial system. And it's going like this. Its price action is going like this because there is no liquidity. And there's no liquidity because the smart money, so we're talking about commercial banks and governments and global central banks, global governments, and even our central bank, the Federal Reserve, has stopped buying the treasuries, and they are transferring the risk from the few, from those guys, to the many. So to the mutual funds, to the pension plans, to the insurance companies, etc. Or when you make your deposit in your 401k and you're giving it to institutional investors that invest your money, this is the final piece. And I can't sit here today and tell you, Chris, that you can't wake up tomorrow morning and have the whole system collapse.
Consider the current financial landscape built on an earthquake fault line. The analogy of an earthquake is fitting. The tremors have begun, and the stability of the financial system is in question. Since transitioning to a debt-based system post-1971, we've seen the financialization of every aspect of our economy. Everything from real estate to commodities like oil and water has been turned into a financial product. This shift prioritized profit over stability, and the 2008 financial crisis should have made it crystal clear that banks and their profits were deemed too big to fail. The traditional way banks made money, through lending activities, diminished, especially after interest rates were pushed down to zero. To compensate, banks turn to trading operations to generate profits. This shift is evident in reports from the Office of the Comptroller of the Currency, highlighting how trading profits became crucial for banks. The infamous 2015 flash crash in Treasuries showcased the market's fragility. Liquidity vanished in an instant, exposing the underlying instability. In recent years, we've seen a series of liquidity crises in the Treasury market, the foundation of the global financial system. The smart money, commercial banks, global central banks, and governments have been offloading treasuries, transferring risk to mutual funds, pension plans, and insurance companies. This trend underscores a critical point. The financial system is precarious, and the risk is being shifted to the masses. Physical gold and silver, held outside the system, provide a sanctuary from this chaos. Spot gold charts reveal a telling pattern, a triple top, indicating that gold prices rise, fall back, and rise again. This pattern signals a failing currency. When the currency fails, people start making different choices. They move towards assets that retain value, like gold and silver. This is not just an American issue, it's a global phenomenon. Countries experiencing hyperinflation, such as Brazil and Argentina, showcase the perils of failing currencies. The solution lies in building a community of like-minded individuals who understand the value of tangible assets. Community is critical. It's about growing together, sharing resources, and protecting each other. When you deposit money into your 401k or hand it over to institutional investors, you are entrusting them with your financial future. But the reality is, we are all sitting on a financial fault line, and the tremors have already started. The financial revolution has begun, and we must adapt. We vote with our wallets. Keeping money in intangible assets means you don't truly own it. It can be easily transferred away from you. That's why physical gold and silver are so important. They are held by you, controlled by you, and free from counterparty risk. They are invisible to the powers that be. A rising gold price is a clear indication of a failing currency. Once you understand this, you start making different choices. In a world where convenience often trumps security, it's crucial to recognize the importance of tangible assets. Consider the psychological impact of financial decisions. When you hold physical gold and silver, you are not only securing your wealth, but also taking a stand against a system designed to strip away financial autonomy. The intangible nature of digital assets and fiat currencies makes them vulnerable to systemic risks. In contrast, physical assets provide a sense of security and permanence. Moreover, the historical context cannot be ignored. Throughout history, gold and silver have been recognized as stores of value. Ancient civilizations, medieval kingdoms, and modern economies have all relied on these metals to safeguard wealth. This historical precedent underscores their enduring value, making them reliable assets in times of economic uncertainty. The community aspect is also vital. In a world increasingly driven by individualism, building a network of like-minded individuals who understand the value of tangible assets can create a support system that enhances financial security. Sharing knowledge, resources, and strategies within a community can provide collective resilience against economic upheavals. Lastly, let's not forget the power of personal sovereignty. Owning physical gold and silver is a step towards reclaiming control over your financial future. It's about making informed choices that prioritize long-term stability over short-term gains. By holding these assets, you are asserting your financial independence and protecting your wealth from the unpredictable nature of global financial markets.
The financial system is built on a fault line, on an earthquake fault line, and the earthquake has begun. I honestly can see a revolution that has already begun. Look at the rise of the workers. Look at what's happening with unions. If you look at a graph on unions, you see them go all the way down, and now it's picking up. So power to the people. I hope that this is not, I would like it to be a peaceful movement because we vote with our wallets. So if you keep your money in intangible assets, well, guess what? You don't hold it, you don't own it, and it is easy to be transferred away from you. That's why physical gold and silver outside of the system, held by you, you hold it, you own it, it runs no counterparty risk, and it is virtually invisible to the powers that be. That's why if you look at the chart on spot gold, what do you have? You have a triple top. That means it goes up to a price and then cuts back, up and down, up and down. But that's because a rising gold price is an indication of a failing currency. And once you actually get that this currency is failing, you make different choices. And this is a global issue. To your point, it isn't just the US, it isn't just Brazil or Argentina or all these other places that are experiencing high and hyperinflation right now. This is a global issue. And that's why community that we were talking about before, community is critical. Growing that community. And I realized something the other day. It was a hard day, so I was out by the pond and I was kind of relaxing. And I know that the reason why I was put on this planet was to have a positive impact on a lot of people. And what I realized is that that's why we're all put on this planet, to have a positive impact on a lot of people, but you do that one person at a time. Freedom is not free. Convenience is not free. And things are always sold as how convenient. Hey, put a chip in your hand and you'll never even have to touch your wallet or your phone. It's just how convenient is that? But they're volunteering to have this stuff implanted and they can control how you think and how you feel. So forget the psychological movement of and perception management of how you think and how you feel and how you move forward. Let's go more directly. We don't have to agree on everything. A little bit of good debate is beautiful because then you can listen to all the sides and you can see what feels right for you. But one thing that we do agree on is how important our personal sovereignty and the community is, because they've done a great job of transferring your wealth. And if we allow it, we are in a total surveillance economy and everything you do is controlled. I have made different choices, and I have made the choices with food, water, energy, security, barterability, wealth preservation, community, and shelter, because these are all the things that we need, frankly, to protect our families and even others, because, you need a variety of skill sets in a community to make things really work and happen. Look, one person can't do it all. And I have so many people that think that I'm the one that's out there doing all the gardening and building and all of this stuff, and I'm not. I've just been fortunate enough to be able to surround myself with community. But not everybody has that opportunity. But yet, they might have the ability to lay irrigation, right? And somebody else might have the gold and silver. And somebody else might know how to do, to install plumbing or grow food, whatever it is. It takes a community.
In recent years, we've witnessed a significant shift in global financial strategies. Nations like China have become avid savers, with Chinese households reportedly saving about 35% of their income, amounting to roughly $6 trillion. Historically, these savings were funneled into property and the stock market, but now more are going into gold and silver. Chinese individuals face restrictions on purchasing foreign currencies or stocks, making gold and silver attractive alternatives. Chinese banks facilitate this by offering gold accounts, allowing citizens to accumulate savings in gold. These banks, in turn, cover these liabilities with physical bullion. The Shanghai Gold Exchange has become a major hub, with significant amounts of gold being delivered to the public. Since 2002, the Chinese government has actively encouraged its citizens to buy gold, recognizing its intrinsic value. This shift towards gold isn't limited to China. Globally, central banks have been amassing gold, signaling a loss of faith in fiat currencies. The reclassification of gold as a Tier 1 asset by the Bank for International Settlements, BIS, in 2019 underscores its importance. Silver, often overshadowed by gold, is also gaining traction, driven by growing industrial demand. Gold and silver's value lies in their tangibility. Unlike fiat currencies, which derive their value from faith, gold and silver are tangible assets with intrinsic worth. As the purchasing power of the dollar declines, the value of gold and silver rises. This trend is evident in the spot gold chart, which shows a triple top pattern, indicative of a failing currency. The erosion of trust in the US dollar and treasuries is clear. Countries are diversifying their reserves, shifting towards tangible assets like gold and silver. This strategic move is about reducing dependency on a volatile and increasingly politicized financial system. The secrecy surrounding gold accumulation is intentional. If the true extent of gold purchases were known, prices would skyrocket. This stealth accumulation phase allows countries to build substantial reserves without driving up prices. The global financial landscape is changing. The strategic accumulation of gold and silver is a response to growing uncertainties. Central banks are not just buying gold, they are signaling a shift towards a commodity-backed financial order. This transition is expected to accelerate as more countries recognize the benefits of holding assets with intrinsic value. For example, India's repatriation of 100 metric tons of gold from the Bank of England highlights a broader trend. Countries are reducing counterparty risk by bringing their gold home. This move reflects a loss of trust in the global financial system dominated by the US dollar. Gold's reclassification as a Tier 1 asset by the BIS further emphasizes its importance. Central banks are not just hedging against inflation, they are preparing for a new financial order where commodities play a central role. Moreover, the shift towards physical gold and silver is a strategic move. The true extent of this accumulation is often kept under wraps to prevent prices from skyrocketing. Countries are aware that revealing their full gold purchasing activities could lead to a significant increase in prices. This stealth accumulation allows them to build substantial reserves while maintaining market stability. The current financial system, built on a foundation of fiat currencies, is losing credibility. Trust in the US dollar and treasuries is eroding, and countries are diversifying their reserves. This shift towards tangible assets like gold and silver is not just about financial returns, but about ensuring stability and reducing dependency on a volatile financial system. The future of gold and silver looks promising as countries continue to diversify away from the dollar. The strategic accumulation of these metals is a response to the growing uncertainty in the global financial system. Central banks are not just buying gold, they are signaling a shift towards a commodity-backed financial order. For American and allied viewers, it is crucial to understand the strategic importance of gold and silver in safeguarding your wealth. As the global financial landscape shifts, holding tangible assets like precious metals can provide a hedge against economic uncertainty. Investing in gold and silver is not just about financial returns. It's about preserving your financial sovereignty and reducing dependency on a volatile financial system. By accumulating gold and silver, you are positioning yourself to weather economic storms and ensuring that your wealth remains secure in an increasingly uncertain world. Remember, it's not just about the immediate financial gains, but about maintaining long-term stability and control over your financial future. By making informed choices and prioritizing tangible assets, you can protect your wealth and contribute to a more stable and secure financial system for yourself and future generations. If you want to stay most up-to-date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.